I know what you're saying. I don't even know who two of those stocks are. Well, that's because you don't recognize that before AI can be delivered to you by Amazon, Google, Apple, Tesla, Nvidia, that the infrastructure has to be built. And that's going to take the next 3 years. And these are the stocks that Wall Street hasn't picked up on yet that are going to explode because Amazon, Google, Nvidia are all depending on them to make what they want to happen possible. Look, it's all numbers. It's all access to data, analyzing the numbers, putting factors to the numbers, and who's growing, who's hiring more people, who's putting more in research and development so that you and I can have what Jensen told us this last week we're going to live with for the rest of our foreseeable future. Let me show you exactly how I came up with Iran, AMD, and GTLS as my top 3 stocks. This is my cheat sheet. If you come to my website, you're going to find an explanation here in this video, some definitions here. But what I want to show you today is the first part of the cheat sheet, and that's what I call my tell sheet. I believe that the growth in our economy over the next 20 years is going to be tied one way or another into artificial intelligence and eventually into quantum computing and general intelligence. But right now, we are building the infrastructure to deliver artificial intelligence to us. And I think it's going to be done in stages. The first stage is going to take place over the next 3 years. And what I've done is gone and found 60 stocks that you'll see listed here that I think are going to be the major players in the next 20 years. But in the first 3 years, we've got to build the infrastructure. We've got to put the data centers together. We've got to create the GPUs and the CPUs that deliver us the knowledge and that is going to be the basis of AI. So what I do is I say, okay, what I want to do is find the growth opportunities, the companies that are going to grow, first of all, in building the infrastructure, the first 3 years, between now and 2020, January 2028, end of 2027. So what I look for is growth. I believe the price in a stock will go up if their earnings per share go up. So what I do is, first of all, find out who is in this mirage or this huge number of stocks that are involved in this AI thing, okay? And I came up with 60 that are showing growth over the next 3 years. Right now, I'm just focusing on the next 3 years. And then I've alphabetized them. There's 60 of them. Starts with Apple, goes all the way down to Vertiv. And you can see they all have positive growth projected over the next 3 years. Some of them, Qualcomm, 6.1%, Micron Technology, 171%, Mercy, 124%. So the first criteria to get on my sheet is, are you growing? Then what I want to do is say, how much of you are you growing, and how much of that growth is already in your price? And so I look at what is the PE ratio. Well, Apple's PE ratio is 32.1. That's a high PE ratio. If I divide the 11% projected growth over the next 3 years into their current PE ratio of 32, their PEG ratio is 2.9. Well, what does that mean? Basically, it says that if a PEG ratio is under 1, the stock is overpriced. If it's over 1, it's overpriced at some degree. This would say that Apple is overpriced at its current price of $236.85. That's what it was on Friday. It's overpriced by a factor of 2.9, whereas ACL is underpriced with a PE ratio of 12 and a growth factor of 15% per year over the next 3 years. So it has a PEG ratio of 0.85. And so you can see what we want to focus on is not only what is the price of the stock going to be in January of 2028, but is it fairly priced, and are we going to get a substantial gain over that period of time, or is it already priced into the stock? And let's look at some that may be already priced into the stock. One of my favorites in that A stock that has a very high PE ratio, it would be that of Palantir. Its current PE ratio at a price of $67.26 is 193. Not the highest right there. Snowflake is 249. But Palantir then has a PEG ratio of 8.1. So financially, from its financials, it's overpriced by a factor of 8, whereas, let's just go up here, Micron is underpriced by a factor of 0.08. So that explains that part of the projection. Then what I do is I say, okay, let's say if the stock price, irrelevant of its PEG ratio and its PE ratio, grows at the same level as its earnings are, what is the price of Apple going to be in end of 2027? Well, if its price grows at 11% per year over the next 3 years, it's going to be at $323.92. Okay, that's a piece of data. What it's worth, we'll have to determine. Then we say, well, what if it grows at that rate, but it gets a PEG ratio of 1? Okay, now its price is going to be $111 if it gets a PEG ratio of 1 over those years. Then what's the fair price today? And that would be, if we bring its PE ratio in line and its PEG ratio in line, its current fair price is $225. So if you ask me, well, at what price should I buy Apple today, I would say $225.04. Okay? Again, this is only financials. Then I say, okay, what if the price of Apple was in line with the PE ratio of the S&P 500 over the last 25 years? That's a PE ratio of 25. Again, remember, Apple's is at 32 right now. But if on 2027, the end of 2027, with earnings projected on Apple to be $9.33, and multiply that times 25, Apple's price will be $233.25, approximately $3 less than what it's selling for today. Okay? These are factors. These are elements that I enter into to make an investment decision. Now, the next column is employee growth over the last 3 years. I believe that a stock will tell you it's found a growth opportunity and it's gearing up for that growth opportunity by going out and hiring more people. Okay, so I look at every one of my 60 stocks and I find out what was their employee count in 2021 and what is their employee count now in 2025, and what kind of growth in that employees, because in order to make more money, you normally need more employees. And so I see that Apple's employee count has grown by 34.93%. So after we do the employee count, the next and last element that I put into my algorithm is what is their performance been over the last 5 years. The reason I do that is if I break it down to their performance just over the last year, every semiconductor company other than NVIDIA had a not such a good year, because you didn't buy a new refrigerator, you didn't buy a new laptop, and you didn't buy a new car because of inflation. So, but what has their average rate of return been over the last 5 years, so I can take any good or over exuberance of the last year out of the equation and give me an average. And so right here, Apple has over the last 5 years had a increase in share price at an average of 34.93% per year. That out of the 60 stocks is the 25th best. Okay? Then I take all of these numbers and I assign them a percentage factor, which is my secret sauce, and I rank them against each other. And again, remember, I am ranking them for their anticipated performance over the next 3 years. Not the next 20, the next 3 years. and Apple comes out 56th. Okay, as I told you, number 1 is down here. This is IREN. Now you're going to notice IREN doesn't have a number for the average over the last 3 years because it hasn't been around, or 5 years. It hasn't been around 5 years. It's only been around 3 years. So I don't give it a number because it's only been around 3 years. And that's the case in a number of them. My number 2 stock then becomes AMD, Advanced Micro Devices. And again, it's a factor of everything that's in the equation. As you can see, it's number 29 in its 5-year, but it's number 5 in its employee growth, and accordingly. Number 3 then becomes GTLS. And you're probably going to say, what does GTLS do? Well, I'm not going to waste your time telling you that here, but what I'm going to tell you is if you click right there, you're going to get a deep dive on GTLS, and you will see a podcast that will go through and tell you exactly what GTLS is, where it fits into the ecosystem, and why it's number 3 on the equation. So I do that for every one of the 60 stocks. Here you see number 4 is NVIDIA, and I think it's pretty evident why number 4 is NVIDIA. Then what I do that I think is quite valuable is I come down here and I give you every week, what do you need to know this week based on what happened last week? Okay, and there will be a podcast that you can find out. And what you're going to learn about on there is agentic AI, something that Jensen told us a lot about last Monday evening. And then, and right now you'll see that here is a synopsis, a podcast on what Jensen told us a week ago on Monday. So you can be up to speed. Then over here, I have some stocks that are in my, basically in my watch list that I'm keeping up with. Hut is Hut 8 is another data center that is similar to IREN. I even do a deep dive to compare the two of them so that 3 weeks from now, when I forget what the difference is, I can come in here, click on there, and go get a deep dive on what's the difference between IREN and Hut 8. So that's how I use my tell sheet. And I take that word tell sheet from poker. You sit down with someone and you play poker with them. And if you've watched a lot of videos on them, you can tell what they're going to do next. I also like the story of Deion Sanders, one of the greatest defensive backs. He said, he was asked, why are you so good at what you did as a defensive back? He says, I watched more film than anyone else. That's what I did. Because people will tell you what they're going to do through their stance, through their gestures, through how they line up, through whether they touch their face. They will tell you what they're going to do next. I believe stocks, companies, investments do the same thing. And this is my tell sheet. And I break it down, and it's a living document. Not only do the prices change as the prices change on Wall Street, but I change it every week. Those of you who have seen this before will say, Kerry, you changed it over the weekend. Yes, I did. I brought it down. I took it and made it more concise and easier to understand. So you can come in here and say, why is COHR the 19th best stock on his sheet? And what do they do? And you'll click there and you'll find out exactly what they do. And then, and this is the whole drive on this, then you can make a better informed investment decision. Now, I want to share one other thing with you. This is for 3 years. Even though Apple is number 56, in the 3 years, it's up in the top 7 for the next 20 years. I have to own it. I have to own Amazon because even though it's number 45, over the next 3 years, over the next 20 years, it's in the top 5. There's a number of them like that. I can't go forward without owning Google. I can't go forward without owning Meta, but it's number 34 over the next 3 years. But in my Roth IRA, there's going to be 7 stocks that I want to dollar cost average in over the next 20 years so I can become a multimillionaire with tax-free money. I'll cover that elsewhere on our sheet. This is my cheat sheet. This is my website. This is how you get access to it. I think I can help you change your life through investing in the biggest change our world has seen ever. And that's artificial intelligence, machine learning, quantum computing. But you have to know, first of all, who are the players and who has recognized the growth opportunity by hiring more people, taking on debt, and pushing their earnings higher. If you can identify them, you will grow and your fortunes will grow alongside of them, and then you can become a 1%er. What's a 1%er? A billionaire? There's no reason you can't, because you have a ticket to participate. It's called investing in growing companies. Companies who have figured out growth opportunities so they can take their billion-dollar companies to the next trillion-dollar company, and the current trillion-dollar company who can be the first 5 trillion and then 10 trillion. This is in the future. You need to decide today whether you're going to participate in it. I can give you a ticket. In fact, I'm going to offer you a free ticket. 14 days. Come study this, learn it, and then you make a decision. Does this make sense? Because what's going to happen in May, Jensen said, is I'm not going to have to do all this work. There's a lot of work put together creating this. Most of it is manual, done by me. In May, Jensen's going to give me a little box about this size, which is going to be my AI agent. I'm going to pay $3,000 for it, and it's going to do all the work.